Hey guys, in this video I'm going to share a very profitable chart pattern with some examples. So the accuracy, or you can say the win rate of this pattern, is very good compared to any other chart pattern. So as you can see from the chart, we are talking about the head and shoulder chart pattern. So basically head and shoulder chart pattern is a trend reversal pattern. So what does that mean? Actually, whenever a bearish, this one is a bearish head and shoulder chart pattern. So whenever a bearish head and shoulder chart pattern appear in your trend, or you can say in uptrend, that mean we can expect that the bullish trend is now over and we can expect some correction from the chart. So in case of bearish, this red one, this is a bearish head and shoulder chart pattern. So the same is with the bullish head and shoulder chart pattern, and this generally appear in a downtrend. As you can see from here, initially trend should be in downtrend, and if this pattern appear in your chart, that indicate that bearish trend is now over and we can expect some correction from the chart. So what are different elements that we have to keep in mind, and where should we put stop losses, and where should be our target? We are going to discuss that. So as you can see, the first thing that you have to keep in mind in case of bearish head and shoulder chart pattern, that trend should be in uptrend. Like this one, you can see the trend initially is in uptrend, and as you can see, at this point we can see some correction of price, and price make a down move like this, and after this price again try to go above this point, but at this level we have some exhaustion from the bulls, and after this exhaustion we have another low at the, or you can say at the same level, or you can say somewhat around this level. So after this another bounce of price happen, and there is another third point over here, or you can say the level of 1 and third can be at some same price level, and after this you can say price finally break down this support zone. So this generally looks like this, but as I plotted with trend line, so this looks like very smooth pattern, but on your chart this is not easily identifiable. So you have to imagine what are the main component. The first component is this one, the number one is our left shoulder. We call this as a left shoulder, and the second one over this point is our head, and the third part is the right shoulder. So in case of bearish head and shoulder pattern, you have to remember these part, and this should form like this that I discussed. The price should be in uptrend, and then it took some rest, and then it took support over here, then try to break out, and then test, make a new high or the new head, and then again test the level same like this one, and then again goes back, and then finally it break down the support. So this is same with the case of, or you can say the inverse of this head and shoulder pattern. This one is a bearish and this one is a bullish head and shoulder pattern. And let me show you some example on the chart from previous trading session. So we will discuss those example. So this one is a, see, the example that I discussed on this chart, this one, sorry, this one is looks like a very neat and clean head and shoulder chart pattern, but on the chart this is not going to look like that. So you have to understand the formation actually. So as you can see, initially we are in uptrend, and after that the price make a high and then tested low, again try to go in the upside, and over this point we have some exhaustion from the bull, and then again make a low, like you can see this same level in the previous low, again try to go up but failed to go above this point, and then we have a right shoulder over here, and finally price break down this low. So what and where we have to put our target and stop losses? So for the entries, what you have to do, actually you have to wait for the breakdown of this major neckline. This is the neckline. Sorry, I forgot to tell you about that. This is the major part that we have to keep in mind. This is a neckline, or you can simply say that this is the support level. So we have to wait for the breakdown of this support. So whenever breakdown happen, you can enter at the closer of that candle. See, this is the 1 hour time frame, so you have to wait for the breakdown and you have to wait for the candle close. After the candle close, you can enter over here, and you can where you have to put the stop losses. Actually the stop loss should be placed at the highest position from the neckline. So the highest position obviously is our head, and we can put our stop loss over here or at the buffer like $4 to $5 or $1 to $2 as per your risk reward. So after the breakdown you can enter here and you can put your stop losses, and for the target you have to measure the same length like this one. So you can wait for your target, and you can see we can get targets if we follow the method and follow the risk reward properly. So this is the example on 1 hour time frame on gold. Let me give you another example on EURUSD. So as you can see, this is another example. So this is on weekly time frame, as you can see from here. And as you can see, the price initially were in uptrend, and after that we have a high over this point, and then price make a low, then this high, then low, then this high, and then finally you can see a breakdown and a good decline. This indicated trend reversal, and you can easily catch a good movement with the help of this pattern if followed properly. So you have to understand how the price behaving, and you can follow the method, and you can easily get profit. This pattern also appear on intraday levels also, like on 1 minute, 3 minute, 5 minute. That totally depend on your imagination power and on your practice. So you have to practice very well to find this pattern to get a good result from this pattern. So this is all about this pattern, and this is very rare formation, so I shared with you, and we will discuss more about the price action and more patterns in next video. Thank you.